Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Tuesday, December 21st. The Santa Claus rally looks like it will continue when the markets open on Wall Street. U.S. stocks are building on 3 straight weeks of gains, helped by strong corporate earnings and continued M&A activity. Investor sentiment is getting a boost from big gains across Asia, after tensions on the Korean peninsula eased, and China's vice premier said the country is ready to help Europe address its sovereign debt problems. That news drove European stocks higher as well, despite a warning from Moody's Investors Service that it may downgrade Portugal's credit rating.
A couple technology stocks are likely to be among the day's biggest winners. After Monday's closing bell, Adobe Systems reported its first billion-dollar quarter on strong demand for its software products. Adobe's sales, net income, and forecast for the current quarter all topped Wall Street estimates, sending the stock up nearly 6% in the pre-market. Following the report, ISI Group boosted its price target on Adobe to $34 a share. Jabil Circuit also had its stock price target raised after strong quarterly results. The electronics contract manufacturer beat expectations with its revenue and core earnings. Shares of Jabil are gaining more than 6% right now. After today's closing bell, we'll get quarterly results from Nike and Red Hat.
In other earnings news, ConAgra Foods reported a 16% drop in its fiscal second quarter profit, missing Wall Street estimates. ConAgra also said earnings in the first half of next year will be weaker than planned, but that things will improve in the second half of 2011 on higher food prices and a good potato crop. Shares of ConAgra are modestly lower in the pre-market, but used vehicle retailer CarMax is gaining 2% after its sales and profit topped expectations. We'll also be keeping an eye on several other auto-related stocks today. Credit Suisse placed new outperform ratings on AutoNation and Lithia Motors, and Penske and Group 1 Automotive got neutral ratings.
Two big M&A deals with some international flavor may move the markets today. Canada's TD Bank is stepping into the auto lending business, buying Chrysler Financial for $6.3 billion. Chrysler Financial is currently owned by the private equity firm Cerberus, so it's not publicly traded, but shares of TD are losing 2.5% on the news. Meanwhile, the Dutch company Royal DSM is buying Martek Biosciences for about $1.1 billion. Martek makes nutritional products that Royal will use in its infant food and beverage ingredients. The purchase price of $31.50 a share, and investors are already pushing Martek near that level in pre-market trading.
Speaking of M&A, a couple buyout firms are among Citigroup's top sector picks for 2011. KKR and BlackRock made the list, along with financial advisors Oxif Capital Management, AllianceBernstein, and Janus Capital. Elsewhere in the financial industry, Bank of America cut its earnings estimate for Goldman Sachs and JP Morgan Chase in the current quarter, but raised its outlook for Morgan Stanley. And RBC Capital placed a new outperform rating on SunTrust Banks, with a stock price target of $31 a share.
No major economic news on the calendar this morning, but tomorrow we'll get the final reading of third quarter GDP, along with existing home sales and an index on house prices. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.